Let's go on to the top 5 things to watch next week.
Okay, number 5 is Apple. So recently, on Thursday, it was announced that Johnny Ive was leaving. Johnny Ive, with his British accent in those crazy videos, you know, the ones where he talks about the beauty of the curves. One of the things about him, though, was he was the head designer and actually viewed as Steve Jobs' protege. So at this point, we're going to be at we lost both Steve Jobs and Johnny Ive, and I'm wondering if Apple is going to be putting in a short-term top. And I'm actually kind of bearish Apple in general. I think that this is just another negative for the ongoing problems that they're going to have. And I'm looking at this 200 level as, again, just like crude oil. It was a retracement from the recent decline, but I think it looks like it might be a good place to sell.
Really? So you're
Yeah.
bullish on the whole stock market. Take the
Bearish
largest market capitalized company in the U.S. that has the hugest weighting in every goddamn index
It's going to underperform.
And the S&P is going to rip higher, but you are bearish and shorting Apple.
Yep.
Good luck. Good
luck.
luck.
I'm actually short Apple,
tell
long
me you're at least
SPOOS.
doing a long short or something.
Yeah, I am. I'm long
okay.
SPOOS, short Apple.
All right. Okay. Because that's
I think when you combine it with
bold call, my friend.
It's a bold call. That's how I roll, man. That's how I roll. I look at Apple as having more than just the Johnny Ive problem. Also, it's a problem with China. I think that they're kind of Chin America or whatever it's called, the integration of China and America. They were at the forefront of it, and as that comes apart, they're going to be at the forefront of all the problems. So I think there's a lot more pain coming.
Well, listen, I will. Let's see what happens. I'm only bearish Apple if the whole market's going down. But hey, guess what? The whole market's going to go down. So that's perfectly fine with me. So now, number 4, I wanted to talk corporate bonds. And you know what? Listen, I'll have to admit that this is where I have a little bit of shame. But like ultimately, I was far more bearish corporate bonds than I should have been. I'm way early.
Really? That's a shock.
No, I'm not heavily positioned in this. I had some puts on it on the LQD type of thing, but so it's not like this is a big stinger for me. But I'm actually shocked how corporate bonds. We're talking investment grade. I mean, we could talk high yield as well, but I wanted to focus on investment grade bonds. But this is the LQD, which is the investment grade ETF. And they're ripping. I mean, it went from 111 to 125, and they've been going lockstep with Treasury bonds to the upside.
Well, they've been going even more than lockstep because credit spreads have been narrowing.
Yeah.
So which means they've been outperforming Treasuries on this rip higher. And ultimately, you know, Patrick, this is one of the reasons that I'm not bearish stocks.
Oh my God, this is
No, but think about it. If you're sitting there and you're seeing your debt go down and you're a treasurer of, XYZ company, you can issue debt and buy back your stock. I'm not saying it's a good idea. Don't get me wrong. Like, don't think I think these are good ideas. I don't care if it's a good idea or not. Don't tell me it's not a good idea. But all I care is about where prices are headed. And I look at this, and this is going to be more fuel to the fire on the positive for the stock market.
I think, well, listen. If it's proven that a recession is not around the corner and that, in fact, we are going to go through one of your little bull narratives throughout the remainder of the year, then you might be proven right. But if a recession's around the corner, this is an epic short because credit spreads almost always blow out during a recession. And for the fact that these credit spreads to narrow the way they are and these bonds have risen this much right before a potential recession, I mean, whether it's going to be a recession or not, you cannot deny that the major houses and even like the New York Fed and so on are putting higher recession probability of recession today than at any point in the last 5 years. And
okay, great. So you're taking the major houses because they've gotten their track record so good.
All I'm saying is that corporate bonds have been running like they stole something. We had to use that because some of our listeners love when we use that line. But they've been running, and I think they're going to run out of gas. I do. I think that this is done on the upside. I can't believe you're bearish bonds but love corporates.
No, I don't love corporates. Okay. I'd much rather own stocks because I think risk-adjusted stocks are a lot better than corporates here. I agree. Corporates are yielding whatever they're yielding. Like, how much can you make? All you can do is hope that you get your coupon back. Like, I completely agree with you. All I'm saying is that this is further kind of evidence that maybe things aren't as bad on the stock market as everybody thinks. Now, again, it could be that the markets are so distorted and they just don't see the fact that the economy is going to plunge. And if that's the case, then these corporates have gotten it tremendously wrong and they're going to be a great sale.
Bingo.
I won't deny that.
You said something incredibly smart right now. All right, so number 3. Okay. Kev, you going to set us up for this one?
More upside on gold? Well, I don't know. We should really be checking with Tony.
Yeah,
because he's the guy. He's the man calling
use the bat phone and give him a
use
quick
the
call.
bat phone. It's Friday afternoon. I think Tony's already in the surfing. Taking the weekend off. I bet by now. Let's have a look here. What do you think? Gold, it's getting a little frothy. I know we've seen lots of sentiment readings that are showing that it's at extremes.
You do realize we might Gucci this one by actually be talking about it right now. I actually really do love this breakout in gold. This is dangerous, the fact that I'm saying this. But I think there's room. Listen, there is 100% room for this rise to be checked with a retracement, something that even lasts a chunk of the summer, pulling back to even 1350 again. But I believe that this breakout in the much bigger picture, like the monthly charts, so kind of what happens throughout the remainder of the year, I think it's for real. I think it's for real.
Okay, so you know what I like better than actual gold is the miners. And maybe I'm wrong. Yeah, because I just think, can you pull up gold in different currencies, Patrick?
I can, but I have to figure it out.
Okay, but for the listeners at home, you know what we'll do? I'll include the chart in the email package. If you go look at gold priced in Australian dollars, gold priced in Canadian dollars, they're sitting at the highs in the case of Canadian dollars, and in the case of Australia, they're all-time highs. All-time highs. Gold is sitting at all-time highs.
Right.
So, I look at this and I think to myself, if you want to go, if you were a fundamental kind of digger, I think there's probably some great opportunities on companies that are based in those countries and can keep their costs based in those countries. Right. And I think that the gold miners are a great looking chart. Like, pull up the GDX. I'm looking here. I see a gap from 24 to 24 and a half that doesn't look like it's getting filled anytime soon. It's like a runaway gap.
Now you're Gucciing that one for sure.
Yeah.
Okay, listen. I am bullish. I am bullish the GDX, but I will take the other side of that. I think that gap gets filled.
Okay. So in what time frame?
This summer.
Okay. I'll tell you what. The sour bet you're on.
Really? Okay.
Yeah.
All right. Okay. So not sour bet. The bet on the beers.
Yeah. Okay. But I'm assuming you're going to make me drink sours. But anyways.
Okay. So what we're talking about here is
so we'll give you till August 31st.
Let me just draw this on this chart.
Yeah.
Okay. So we're talking about this 24 to 24.50 gap. So what defines
if it ticks
my victory?
It has to tick at 24. What was the high
under
that
24?
day? No. We'll give the exact high. 24.03 was the high tick. So if it ticks at 24.02, you win.
Okay.
And it's August 31st.
August 31st. Done.
Okay.
Done.
Awesome.
My God, this is going to be so easy. This is like taking candy from a baby. This is you.
It is. You know what? Bad. Like I know that I'm giving away too much because it's like a one-touch option. I get it. That chances are.
But that's a gap fill. We bet on a gap fill, dude.
Yeah, I know. But the reality is that, like, if I price out the option correctly, I probably have. That's not even up. But anyways, I'm going to do it anyways because that's how strongly I feel.
No. Here's the even up. 3 beers to 2. I have to drink 3 awful beers. You only have to drink 2 of them.
Okay, done.
Okay. All right. So let's move on to number 2. And we had a guy on Twitter who basically couldn't believe the other week that we didn't put Bitcoin into the top 5. But then he went on to mention that now if we did it, we shouldn't do it because we'd Gucci it. And
Gucci the Bitcoin. So now we're doing it.
And so we're going to do it just
Screw you, Bitcoiners.
We're going to find out whether or not we're capable on this show of goochering the Bitcoin rally by actually talking about it.
Oh man, this thing is
So-
crazy.
Now, but look at it's just like, it's like, it's a deja vu of like this phase, right? Like, I mean,
Yeah.
it's gone like full parabolic. It's once again doing this whole thing. But what's interesting is that it's not the entire crypto space. It's really Bitcoin that's kind of doing this on its own. Maybe it's all the derivative products that are associated with it and all the other
Well,
ways
no, it's because
people can-
Bitcoin is such great value compared to the rest, Patrick. Don't you know? So listen,
not
I
gonna
will
say
tell you
anything.
one. I will tell you one thing. As you know, I was a miner. I did arbitrage, and I actually owned Bitcoin at like $80, and we were mining in our office, and it was getting so hot that we had to take our machines and stick them in our garages and stuff. So I was early, and it went from $80 to $1,200. We traded it, and then it went back down to $400. And I thought, okay, that's it. That was the dumbest thing I've ever seen. It's never going to happen again. Glad I made some money. Blah blah blah. 3 years passed. I was doing that at the end of 2013, and then I gave up early 14. 3 years passed. It actually went to 225, 226.
Yeah.
And then the real rally came. Now, we've had this huge decline. And then once again, I thought to myself, that's it. We're never going to get any stupider than what we saw. And we went from 19,500.
Never underestimate stupidity.
Yeah, down to 3,300. And here we go. All of a sudden, we're back to 12,000 or whatever.
Yeah.
I don't know. Patrick, it wouldn't surprise me at all if it went to 100,000 because it's all just like trading sardines. Like it's just there's no reason or any fundamental value to this. But so be it. I know I'm going to get in lots of trouble from the Bitcoiners, but so be it. I'll take that scorn.
You are about to get taken.
Yeah.
Oh, wait,
Well,
I'm dying to see your Twitter feed. Make
Yeah,
sure everyone that puts the
scorn.
hate mail out onto Twitter, make sure you include my
But
handle
listen
so
this.
I can
Listen this.
read it.
You know who we were talking about Tony the other day? Tony was a huge Bitcoin bull and actually nailed that in terms of this rally. He's gotten out. He's kind of tapped out. And one of the things I'm going to ask you, Patrick, back up a little bit and do some of your technical analysis, voodoo magic there, and tell me, are we not just seeing again a retracement of that kind of move from 20,000? Do your crazy
upside?
magic. No. So we
You
went
want
to
me to
we went.
retrace? You want me to
Yeah. So do
retrace?
this. Yeah.
You want me to measure the decline
Yeah.
like this, and you want to do some
Yeah.
fibs on here? Okay.
Yeah. Of course. I love the fibs.
Look at that. It's messing around right at the 61.8.
Yeah.
Around
There you go,
14,000.
man. It's magic.
What are you saying? The 14 is it?
Yeah. I'm going to say the.
Yeah, you
14's
just
it.
said 100,000 just a moment ago.
No, I just said but I just said nothing surprises
Oh my
me.
God,
If
my
if
head
you
is
made me
spinning
bet.
from
Listen,
you
if you
just-
made me bet, if you said to me,
gibberish-
long
the
or
gibberish
short,
is spewing from
long
your
or short
mouth.
Bitcoin for the next year, it's always like I'll take the pink side of the trade ledger there every single time.
Okay. Well, you know what? I'm going to let you do all the talking here. I don't
I
want
know.
to get in trouble.
You know, you're just people already all hate me on Twitter, anyways, buddy. It's okay.
Why don't we
Let's
just
go.
throw Trump into the conversation and then just lose half of our listeners all at one shot? All
It's
right.
okay because the Bitcoiners are a very reasonable bunch, and they see both sides of the story all the time.
All right.
Yeah.
So let's go to number one. So, Kev, the jobs numbers.
Do you know what I love best about this jobs number, Patrick?
No. Tell me what you love about it.
It's Friday, so it's a week today,
Yeah.
but the Americans are taking Thursday off.
Right.
So we're going to have a situation where Friday we're going to have some people come back to trade it, but there's no way that it's going to be anywhere near
The volume.
full staff.
Yeah.
So I was actually thinking about it. I'm almost wondering if I should go. I'm always usually hesitant to buy Gamma in front of a number like that. Because I always think that they overprice it and that you're
Yeah.
generally off a better seller of Gamma. You know me, I'm usually short, right?
Yeah, always.
So I'm almost wondering, though, given the fact that there's going to be so little liquidity, that the potential for something big and bad to happen either way, And I'm not even saying that I think, oh, you know what? I think the bonds are going down. I could see it going either way really hard.
Right.
That maybe that's the play. Maybe owning Gamma, owning a straddle into this, because of the way it's set up with the holiday, is probably the thing to think about. Because
Interesting.
I just don't see anybody, coming back to trade. Like, obviously there'll be some.
But you have to think though the jobs number would have to be a surprise. I mean, if it comes in line, I don't think you're going to have a big.
No, you're right. You're right. It'll collapse. It'll come. But what I'm saying is, a regular number. A number that is outside of what everyone's expecting will cause an outsized reaction. So on a typical day, maybe bonds would move 1%. I think the possibility is that they move double. Like, I don't know what the numbers are, like whatever the volatility is, but I just think you could get more of a move because of the illiquid conditions than we've ever had. So I think you should be careful.
I personally think that the number could come in line because while I am super bearish, I believe that the jobs numbers will be the last ones to move, and I don't think that the whole economy has started to weaken to the magnitude that it's going to manifest itself in changes in job numbers yet. I mean, I honestly think by the time these job numbers are doing something crazy, we'll already be in the recession. Like, I don't think you're going to get anything.
Well, what if you got a number that was stronger than you were expecting, Patrick?
I don't think that would be a surprise, to be honest. I mean, look, first of all, let's be realistic. Every 1 month number is irrelevant. It's a sequential series.
I disagree with you. I'll take the other side of that trade. If you got a hot jobs number with like wage gains that were showing something really strong and then unemployment going down, and I'm not saying that's going to happen, but I'm saying if you did, it would cause the short end all sorts of problems because it would put July back into play.
Absolutely. I agree with that.
And there would be all sorts of weird, wacky shit going on if that does happen. So maybe you're right. Maybe a bad number doesn't really do much. And, an inline number obviously won't do much. But I think a hot number would cause a huge reaction.
They would be
already,
pulling out
everybody
July.
and their grandmother is long. Actually, my grandmother phoned me up and asked me how to trade levered T-bond futures, and she was, wondering how she could get some real juice. You know what? Like that's she did. I was like shocked. I was like, Grandma, like you don't usually trade T-bond futures. What are you doing? Usually you're just like long spoos. But I really think that there's so much speculation in the bond market, and the front end of the curve especially is just like they bullied the Fed into some crazy stuff. And if there was a hot number, it would cause some real problems. And I'm not saying it's going to happen. I'm just saying that the chance of something big and bad happening are higher than people think.
All right. Well, you heard it from Kev. All right.